Hej och välkomna till Garantums-studion och till ett nytt fondporträttsavsnitt. Idag har vi valt att fokusera lite på det alternativa tillgångsslaget och mervärdet som det här tillför till den totala portföljen. Egentligen hur det kompletterar rena aktie- och räntefonder som vi har i portföljerna idag. Så därför har vi valt att bjuda in Mark, som är då ansvarig förvaltare för en av fonderna som vi har på vårt fondtorg, Jupiter Strategic Absolute Return Bond Fund, det är ett långt namn. Och det här är då en makroautomatisk absolut avkastande fond. Welcome Mark, and thanks for coming.
Thank you, Andreas.
So please, short introduction, what's your fund, what is it, how does it work?
Yeah, it's an absolute return fund. We predominantly invest in sovereign bonds and currencies. We're looking to get positive, consistent returns through the cycle. So clearly our process needs to be different if we're going to achieve that. We target cash plus 4, and we're looking to do that with a low level of volatility that bond fund investors are used to, roughly around 4%. I would say the sort of three key attributes about what we do is, one, we always start with the sort of top-down key growth and inflation fundamentals. In this environment, if you get that wrong, nothing is going to work in your portfolio. Secondly, we have a lot of flexibility as well. We have a full derivative overlay to create the portfolio that's going to work. And finally, we're very liquid. We don't invest in credit in a big way. And so we have a high credit rating and low default risk for the portfolio.
So would you say this is a type of hedge fund, or how would you categorize this fund?
In the environment we're in now, in which clearly interest rates go up as well as they go down, we need to be careful managing our portfolio. We can't manage to a benchmark. We need to be careful not having too much market beta exposure, if I can use that expression. So it's very much an alpha-driven portfolio. We're looking for those sort of long and short positions, and sometimes directional positions too, in order to sort of pinpoint the areas of risk that we want in the market. So if duration or bonds do sell off, we still have the chance to get a positive return by removing the unwanted risks within the portfolio. So it's hedge fund-like in a sense, but it does offer daily liquidity.
Yeah, and looking back towards 2022, which was a rough year for both fixed income, both equities, very rough time. But you managed to return a positive return to your investors. How did you accomplish this in that time of
a lot of this was about the flexibility that we had. So, again, not following a benchmark with the ability to go short. And so when you had this environment in which bonds and equities were selling off, and within fixed income, all fixed income was selling off, we did have the ability to protect by hedging out unwanted risk, but also take short positions to produce alpha on the short side. So we got that positive 6.5%. But what was very key about last year, and this is something that's going to continue to happen, the problem with last year that bonds and equities got hit was because inflation was high. Now, yes, inflation is going down now, but our view is in the future, inflation remains a sort of permanent risk. And so we can get these episodes again in which all assets within the markets get hit together. And so having the flexibility that we have, we think is really important in this new macro environment.
Interesting. So looking at these type of funds, the alternative funds, how would you say this fits into a total portfolio to manage good correlation, or how does it fit? And what's your take on the fund into the total portfolio?
So we have some clients who see us as an alternative cash plus, which is absolutely right. But we also have other clients that are seeing us as a sort of replacement for their more traditional fixed income, or a hedge for their more traditional fixed income. So whilst we don't tell clients that investing in things with spread, things in corporate bond space are a bad idea. Yes, have those investments. But also alongside that, have these more alternative, flexible, long-short funds that do have different time horizons and processes than the more traditional funds. And you get good diversification, across your portfolio. Because at times the credit will do well, the things with spread will do well, and other times, obviously, these alternative funds will do well. So you get good diversification benefits as well. But what you also need to look for when you're making your selection for these alternative funds is funds that have a good Sharpe ratio, that they hit the returns that they're after, but they do that with a good deal of risk efficiency. so their Sharpe ratio is reasonably good. They get a nice upward sloping profile of returns. So things that aren't correlated and things that have good returns with a good level of risk efficiency is absolutely key when you're looking at the alternative universe.
Yeah. Very interesting. Thank you, Mark, for coming by. I really appreciate it. Super interesting fund. Och tack för att ni lyssnade och att ni tog tiden att lyssna. Och håll utkik här även framöver på nya fondporträtt. Och om ni vill investera i Marks fond, Jupiter Strategic Absolute Return Bond Fund, så finns den valbar på vårt fondtorg i dagsläget. Tack!